So, buy to let versus the stock market. I've been asked this question a lot, primarily via my DMs over on Insta. If you're not following me over there, check out my page. I'm at Warren Gosling. And it basically goes something like this. I have insert amount here, X pounds to invest. Should I invest my money in buy to let property or the stock market? Today, I'm going to answer that question for you using real figures so that you can make your own decision on where to put your money. What's up guys, it's Warren Gosling here, back with your weekly wealth building fix. I'm almost at 1,000 subscribers. Yeah. And my goal is to grow and get to this level this year, guys. I'm putting it out there, but I need you guys to get there. So if you find this content helpful, please take a second, literally a second, to like and subscribe and recommend this page to a friend that's also looking to build this wealth. Thank you guys. Stick around to the end where we'll look at real numbers so you can compare the total return you get from investing in property versus investing in the stock market. So bringing this back to investing in UK property versus stocks, let's answer this with some real life numbers. Approximately speaking, I'd say it takes at least 35,000 bare minimum to invest in a UK buy to let property. And with that amount, you're going to get a property costing round about 100k. That's in a decent but affordable area of the UK. That's my personal buying strategy. And I've been achieving this buying one bed buy to let properties costing, as I said, £100,000 in the centre of Liverpool and Sheffield, to give two real life examples. And the 35k is going to cover the 25% deposit, that's 25k, and then the rest is going to be used for stamp duty, legal fees and broker fees. So that's a bare minimum, I'd say. Now, let's say I had a choice between using this £35,000 to invest in UK property versus the stock market via, say, a regular FTSE 100 index tracker fund. I'm going to compare the return you get from both of these using the historic returns data, what people have made to date in the UK from both of these areas of investing. UK properties have grown an average of 21% over the last 5 years. Now bear with me whilst we do some quick maths here. You use your 35k to buy a 100k property in 2016, 5 years ago. The property increases in value by 21% over the 5 years to 2021. That's a £21,000 increase in its value from 100k up to 121k, which equates to a 60% capital return on your original £35,000 investment. Now you also get a return from the rental income every month because you're letting it out and you have a tenant and they're paying you rent over those 5 years. The average UK rental yields are 4.7% per annum. So these two combined, the capital appreciation and the rental yield, equates to a total return of 83.5% over the last 5 years for the average UK buy-to-let property. Over that same period, 5 years, we've seen that the UK FTSE 100 stock market has grown by 27%, and this is with dividends being reinvested. So in monetary terms, in pure monetary return terms, if you'd invested 35k into buy-to-let property 5 years ago, in 2016, your 35k would have grown to £64,225 today, an 83.5% return. If you'd invested that 35k into the UK FTSE 100 stock market via an index tracker fund, the value of your 35k would be worth £44,450 today, i.e. a 21% return. So when it comes to the question of whether I should invest in buy-to-let versus the stock market, in pure numbers terms, we can see that the winner is buy-to-let property. Now, of course, this is an average, guys, and with averages, there's going to be many properties that underperform that 83% return, and there's going to be some that overperform, okay? This is an average. But of course, averages are useful because it gives you a rough idea of what properties are doing generally across the nation. Now, let's extend this and look at this over a slightly longer 10-year period as opposed to a 5-year period. The property return increases to 171%. This is the average capital appreciation and rental return combined, and the UK FTSE 100 return is 61%. Again, property is the clear winner here, guys. Now, both these returns are clearly good. Investors would jump at these returns, okay? But it's clear to see that property has kind of Usain Bolted its competitor here. The reason behind this is down to a thing that we call leverage. Now, leverage is using borrowed money, i.e. a mortgage, to increase the return of an investment. The most common way to do this, as I said, is via a mortgage. And you've seen this with the numerical examples that we've just gone through. In other words, if I'd have bought that 100k property outright with all of my own money, are you putting 100k of my money in as opposed to putting in just 25k? In the scenario where I'm putting in all my own money, the return would not be as high because I'm not leveraging a mortgage from the bank. That's why it's a great tool to use in property investing, guys. So in summary, we can see that when it comes to a choice between buy to let versus the stock market, if you're using a mortgage, you want to put your money into property according to the average UK figures. And again, guys, that's not me saying only invest in property. Don't do that. I do both because I like to diversify my investments. You need to diversify your investments. But I just wanted to show you how they compare in pure numbers terms. So that's today's video, guys. Thanks as always for watching. I really appreciate. If you want to support the channel, please like this video and subscribe. I've been Warren G, and I'll see you guys next week. Take care.